Hello everyone. This is Emporos, and man, do we have a lot to cover today. How are people still debating if this is a bull market? I'm not here to tell you what you want to hear. I'm here to tell you what the market already knows. The bull market isn't driven by hope, it's driven by silence. No one's ready to admit it is real. The market already decided this weeks ago. It's not asking. It really isn't. It's just moving. People are fading strength. They have the timing all backwards, in my opinion, all backwards. This is not something that happens and settles in 2 months or 3 months. I was expecting a year-long plus process. We're going to get shakeouts, chop, slowly grinding higher. We're going to have every bear get extinct because we are on the verge of a new economy. So what happens next? Well, that's the question everyone asks. However, what we can look for is dips being bought up. We want to see excuses and narrative. It is narrative distortion. It is a war. We are in a trade war. We are in a narrative war. That is how markets breathe. They live and breathe. They don't just go straight up in a line or they don't go straight down in a line. We have Moody's now, this sham organization. When have they actually done anything? How are they years late? They finally downgrade U.S. credit. And what does the market do? It's going to shrug it off. That's not bearish. That's a signal. Downgrade is ignored. It's confirmation that we are in a bubble. Bubbles rise. They don't sink. They pop like a big boom. So we have Moody's. And you guys remember what happened in 2011? The S&P was downgraded and the markets soared. They ripped higher. If you read my last article, which I recommend you guys do, it's on Substack. It is free. And it talks about the new economy. It mentions Uber. Now, where has Uber gone since I posted this article? They are completely becoming autonomous. We are seeing a whole new ecosystem being created, and no one is even talking about this. How is no one mentioning this? They're talking about, Ethereum might finally go up. Wow, how interesting. That's all they're focused on. They don't see... You have to understand the core behind this to really understand why this is a bullish bubble. So they didn't launch AI. Uber became it. You order a ride. No driver. Nothing. No tip. Boom. On your destination. It's almost like some Grand Theft Auto type gig. So you have cars arriving at a click of your phone. They're popping up in front of you. Driving. Self-driving. Tesla has, at the end of this year, they're going to have cars being sent to your driveway when you buy a new car. We're seeing all these examples play out in front of our face. It is the most bullish signal in years, and no one's talking about it. That's how we know that we're onto something here. Crypto is a whole new industry that is finally getting incorporated into the decaying and old system that is going to be rewritten, completely rewritten. What people are used to now is over. I had a really good economics professor somehow, I know. He said that we are moving from a labor-driven market to a capital-driven market. And we've already seen signs of this play out. This was probably in 2018 or so. And look what happened over the last 8 years. He was completely right. He would make fun of economics all the time. Like, they're never, ever right. It's all driven by agendas and narratives. It's narrative distortion. It's actually crazy how far the narratives have been posted. Remember when they said rising yields would kill tech? Then they said the Bitcoin halving was priced in. And that old debt ceiling narrative, all corpses. They don't exist. So, this isn't a rally, it's a trap. And some of these guys are right. So we have amateurs and furrows, the ones saying, we're bullish, and crazy price target people, the ones that always pop up. They might actually be right over some of the more sophisticated, quote, amateur traders. Now, isn't that a shock? And they're still going to be buying because this time, remember this, all the way back from 2017, this time they understand the tech. We come full circle. Wait, do you think hodl, hold, it's the meme from, the early 2018s. Do you think that'll make a comeback? 2018 was arguably a pretty strong bear in crypto. So we haven't seen anything like that again. And honestly, if you think about it, Bitcoin's average decline on each bear, about 6 of them now, maybe 7, 80%, right? So we've seen wild corrections. We've seen meme coins. We've seen NFTs blow up, and they might come back with a vengeance too. So what comes next? Well, like I said, we still have this extract, pump fun, hyperliquid type grift going on. Yeah, so I like the DEX of hyperliquid, okay? It's good. But they made a mistake going back to the ancient old EVM that Vitalik wants to leave. I discussed this in the last episode. You can go back and listen to it. However, it's just the basics. Like, I'm not going to get too into all that today. I'm talking about the framing of why we are bullish and how to trade a bullish market. So, you ride this stuff while the going's good, right? You ride it all the way up. So all of this is the fuel. The chop is fuel for the extended moves. So next we're going to look at a couple bull market quotes from some promising people. Howard Marks, Paul Singer. Some people that had some really good quotes. I'm going to read one of them to you now. And then we're going to get into, in the next segment, how to properly trade a bull market. You're already on the right step if you're buying and you're already in position and in profit. A lot of people are still worried about missing the boat, sidelined, coping, calling for shorts, being early. Oof. Man, can you imagine that? Can you imagine seeing your P&L red and being like, oh yeah, I'm going to be right one day here. I'm going to be right, guys. I've been calling it wrong for the last month, but eventually it's going to go down. Like, no shit, Sherlock, it's going to go down. That is the whole point. When we eradicate the bears, we will go down because this time there is a reason for us to go up. So, quote by Paul Singer, as a runaway bull market persists, its relentless vacuum cleaner eventually sucks everyone in. Investors who are skeptical about the perceived overvaluation are forced to watch as their career prospects melt down and prices melt up. New rationalizations discussed as rationales enter the higher levels of discourse to justify jumping or creeping onto the asset price train, disdaining that when it was dozens of percentage points lower. A feeling of fear and acrophobia then becomes replaced by the giddy and disorienting feeling of finally being on track to make money along with the crowd and not feeling isolated in cranky value land. Paul Singer. Wow. So, this brings up a good point. When was the last time we made money with the crowd? When was it not PvP? Now, trading is a zero-sum game, yes, but when was the last time the crowd actually got to ride a trend? 2021 for crypto? 2020? Or COVID? I think so. I think 2020, 2021 was the last trend. So, it's been a good... Where did the time go? It's been a good 4 years. 4 to 5 years. Because before that, 2019, 2018, 2017 was when crypto was finally getting its first 100 bill moment. So we did have a trend there. But I think the real one with a lot of people, the first real trend they experienced was in 2020 and 2021. So this makes a lot of sense now that you think about it. And this brings me back to April. When the market was crashing, right? When it was correcting, I was going off about how this was finally it and this was finally the crash, right? And then I realized it was the correction. I was able to pivot. So Burry being completely out quarter one doesn't necessarily mean that he's not in or that he's early yet. So he just is notoriously early, and he probably sees what I see. It is a bubble. So when you know something's a bubble, what do? Well, I know a few, I think is it Soros who says this? Don't quote me on that. He said, maybe it was Buffett. He said, if I see a bubble, I buy right in. So if we're on track to being a bubble, I think we're still so early. No one is even talking about any of this yet. I really do. I don't see it. I see bears and I see nonsense all day on the feed. I had to take a break because it was just nonsense after nonsense. And just, how many times are you going to be wrong? It is a sin to stay wrong, not a sin to be wrong. And with us, with our capital, we're more flexible, right? We can pivot in and out. We're not a $10 billion firm who has to be in the market, like these mutual funds or some of these hedge funds or BlackRock being massive to where they have to hedge and where they have to buy in bulk Bitcoin. You understand? We have flexibility. So these guys on Twitter, on X, They have no excuse. They're not managing billions of dollars to where they can't leave the market. It's ego, it's emotions, it's narrative warfare. So another quote, Francois Rochon, I think I said that right. This is a good one too, because it really puts into perspective some of these people making money on the meme coins. And here, let's read his quote. In the last stages of a bull market, when you have a lot of people making lots of money on all sorts of things that are not within your circle of competence, you must be rational to accept that others are making money in things that are not for you. You must react with equanimity about that and not be affected by the fact that other people are making money and you are not making money in whatever situation. It takes a lot of rationality to do that. It is not easy to do when other people are making money. When they make it look what looks like easy money on things that you believe are not good investments. And we see a lot of that with the meme coins, right? We see a lot of things that are just not going to survive that next bear. They're not going to survive that bubble popping. And if you look into it, oh yeah, that was by Francois Rochon, as I said. Anyway, if you look into it, we're only at 3 trillion in crypto, right? That is so teeny. You know, you guys know the dot-com bubble in 2000 was 10 trillion. That is when it popped. So if you look back and look at the charts to confirm this, we might be in 1998, right? We might have a couple of years before this whole disbelief. We're going to start seeing some innovation, like more with Uber, more with Tesla, more with some of these companies. We're going to start seeing it happen. So while Moody's might downgrade credit, which is a completely non-event, you're going to see the actual new economy being built and these people clinging on to what was, to what is, to where they made all their money. That's why you see a lot of pushback in media. They understand what they're doing. It's just narrative warfare. So you're going to see this market cap. I don't know how far we can run, really. 5 trillion, 10 trillion, 20 trillion? Is there going to be a correction, a pullback before that happens? Shakeouts? Of course there's going to be shakeouts. The key is to keep pushing onward until we see a red flag. That is why I recommend my indicators. Of course, I'm going to mention my tools here. Go ahead and click on the link below if you want to check them out. They have been very helpful. We still have weekly buy signals on everything. Short term, we had some sells, which is what we're seeing over the weekend, which I think created a lot of the uncertainty, right? So we have some temporary uncertainty. Weekends are low volume. So a couple more quotes, then we'll get into a few different market prices and see where it goes from there. So yeah, here's one I found from Philip Carrot. Bull markets and bear markets last long enough so that the average trader is likely to forget by the time the climax is approaching that any other sort of movement is possible. And man, do we see a lot of them right now. So many PTSD bears. Maybe in the next episode we can mock some of these vertical line charts that they draw, because wow. If you follow my X account, but man, some of them are funny. We can really go into some of that. And then we have the guys that are like trying to sell you something, but indirectly, and they use all these fancy terms, almost like ICT labeled language, where it sounds complicated to get you involved, and then it's just a knockoff and renaming of basic concepts. So the structure is always the same, right? But then if you start adding on a bunch of funchy mumbo jargon like this, where you say it's FDV, volume, liquidity, manipulator, blah, 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 you get what I'm saying? That's what they sound like to me. It's a bunch of mumbo jumbo, and it's initials too. Like you're supposed to know what FDV means. And these giant boxes they draw with these lines. Oh my God, what are they doing out there, man? Like, these guys don't realize that the technical analysis, the charts, are meant for your entry. They're meant to know how much you buy at a certain level. That is your risk. That is what you do. They're not a crystal ball. Sure, you have indicators, you have things that are leading that can give you a signal. Like if someone's buying a lot of an asset, you're going to know that, oh, look, someone's buying a lot. It's probably going to go up. That's the essence of it. All right, so one more quote. Let's find a good one here. Let's see. Common stocks, this applies for all markets, by the way. Common stocks should be purchased when their prices are low, not after they have risen to high levels during an upward bull market spiral. Buy when everyone is selling, and hold on until everyone is buying. This is more than just a catchy slogan. It is the very essence of successful investment. J. Paul Getty. And one more really good one that I found. Market extremes represent inflection points. These occur when bullishness or bearishness reaches a maximum. Figuratively speaking, a top occurs when the last person who will become a buyer does so. Since every buyer has joined the bullish herd, by the time the top is reached, bullishness can go no further, and the market is as high as it can go. Buying or holding is dangerous, since there's no one left to turn bullish. The market stops going up. And if the next day one person switches from buyer to seller, it will start to go down. And that's from Howard Marks. So Monday will be very interesting, right? We'll see how much of a dip we get, if we get any at all, and how much buying comes in. Like I said, it is the summer. Summers usually have a lot of traders and people on vacation. I expect a chop. I really do. I don't think we're just going to instantly, magically have it all happen in a month, right? You got to think a little bigger. Like the technology that we're front running right now isn't there quite yet. Like we see signs of it. Tesla, Uber. As I discussed early on, we see a lot of signs of the new economy. The key is to keep looking for more. Blockchain. Real quick, we're going to cover before we probably call it after this. Blockchain is the framework. So I heard someone in my last episode mention Grand Theft Auto and how it could be incorporated into blockchain. And that is a pretty interesting thesis, because blockchain as an economic framework that can be implemented with the old system is probably the future. That's what Eth's doing. Eth made some recent network upgrades, and they're trying to get their shit together, right? They're really going at it. That's why I've been bullish Eth. The infrastructure will outpace the bag holders. That is just my opinion. That's how I see things. The Eth article is still being worked on, right? People, I'm trying to phrase it properly, so when I say, oh look, Eth is doing centralized solutions, it's global, it's the bank's playground, Wall Street is involved, people don't come and try to, it's got to make sure it makes sense for everyone and why number will go up, since that's all anyone cares about. But like I said, that's a cycle. Decentralization, centralization, they go round and round like a clock. You can never outpace one or the other. Even if you get ahead by a couple years, they both flip-flop, and then there you go. However, America still has a lot of bullish news to release regarding crypto. We have a lot of regulations that were never clear, stuff that can drive companies and these old crypto firms to come back. And hopefully we get perps in the US too. I know Coinbase is making moves. They're finally added to the S&P. So there's a lot of stuff that could happen and be released over the summer as well as the chop. So we're going to see little impulses. We're going to see the chop really get on people's nerves. We're going to have shakeouts. You got to learn to deal with the chop. Nothing happens overnight, instantly. This is not an instantaneous process. It's going to take a little bit of time. And of course, we'll go over it. We'll look for flags. We have our indicators. I'll be with you. I'm not going anywhere. Going to release these episodes a lot faster as well. We're going to look for traces of blockchain. As I mentioned last episode, blockchain gaming, right? I cannot believe how much they set the industry back with this greediness. You got to stick to building something fun. You need to build something good and fun. Okay? Everyone is just greedy. They want to get their name. They want to extract revenue. It's gross. That's what set us back. That's what caused a lot of these corrections and bear markets of the past. So hopefully this bubble will see a lot of actual implementation that'll drive us forward, and then we'll purge all that junk out after the fact. So of course a lot of them won't survive, but in the meantime, please make as much money as you possibly can with them. Just don't fall into the trap, okay? We can remain irrational far longer than you think. And with that, guys, this is Emporos. I hope you enjoyed today's episode. This will only be lightly edited, so please forgive any minor mistakes you may see. I'm going to try to release a lot of these. Okay, I'm going to start churning them out. So be here or be nowhere. I'll catch you guys on the next one. Take care. Have a good one.